Hey everyone, it's Tom Kradza, and today we're going to talk about sound versus unsound money. And I'm walking through the office here because no one's here and I feel like I have the whole office to myself. So I thought we'd journey through the office here, but I'm going to take you to our little whiteboard up here. And my wireless mic has been out of battery for days. I can't believe I didn't charge it up, so I don't even have a mic. So we're going off the iPhone right now. Let me just settle this in. So I just wanted to talk about this. I did a little arts and crafts project here for everybody at the front. I don't know if this works out or not, but I thought the best way to talk about unsound money versus sound or hard money is to describe to you how we feel we should be playing the money game right now. And of course, this is our opinion. This is what we're doing. It's what we talk to a lot of Rockstar members and clients about. And this has kind of been our lives for the last, I guess, 13 years now. But this is how we would map it out. And I'll get to the point of unsound versus sound or hard money. So we feel to protect ourselves in 2020 and playing the money game, that we have to break up things into three categories. So we have the cash bucket, and that's represented over here. We have the precious metals or hard money, and I'll explain why I'm talking hard money more than precious metals in a second. So the hard money bucket, and then finally the income producing assets over here. And the reason that we've broken things down into these three buckets, we feel that if we play the money game like this, almost any economic environment can come our way and we can navigate through it and prosper. And what I mean by that is if there is an emergency that hits us, or if deflation happens in the economy, and a lot of people are talking about the possibility of deflation coming our way. The inflation number is negative in Canada right now, so perhaps over the next 6 months that continues. That could be a deflationary environment. If money kind of is pulled out of the system, we could be in a deflation situation, and we don't really have historical context, at least the last few generations in Canada, we don't have historical context for that. But in that environment, cash is king, because your dollar next year is actually worth more than your dollar today. We're all used to inflation, where your dollar tomorrow is worth less than it is today because of inflation. But if there's deflation, you want cash. Cash is king. So that's something to be aware of, and it's why we believe one of your buckets should be access to cash, save up some cash. The next one is hard money, and I'll talk about that in a second. And over on the far right here are income producing assets. And the reason we believe strongly in those, of course, we own and operate Rockstar Real Estate. We help people with the little greenhouse aspect of income producing assets, is because we believe income producing assets produce cash flow, and you need income in your life. And if deflation really does take hold over the next few years, 6 months, 1 year, that actually comes to fruition. Income and cash flow is going to be really, really important. But not only that, when you have hard assets and income producing hard assets, there are protection in our mind against inflation. Because hard assets, durable goods, things like that are going to go up in price in an inflationary environment. And you don't have to have income producing properties. Your income producing assets could be small businesses. That's my little lemonade stand right there that I cut out for us. That represents a small business. You might start a small business from scratch and produce an asset out of nothing for yourself. And that could be a great income producing asset. So whether it's properties or your own small business, whatever it is, we believe you want something over here as well. And then finally, the hard money. And here's what I'd like to describe about hard money. A lot of times when we'll talk about gold and silver, and now more and more about Bitcoin as well, when we talk about gold and silver, a lot of people will say, well, you know, that's tradition. People hold that rock because of tradition. And that's not really the case. If you read through history, first of all, it's not a rock, gold and silver are metals. But it's not that it's tradition. It's because it's been the best form of money, and I'll talk about that in a second. And then there's Bitcoin that's coming into play here. And the reason that Bitcoin is hard money as well is because of what we talk about, the stock versus the flow or the inflation rate of these three things. So let me describe what I mean. Overall, with hard money, we like them because they act as insurance against the system. They are out of the current monetary system. So if anything happens, if there's a monetary reset, if something big happens, it's insurance on the system. And if we believe if you have insurance on your car and your house, why wouldn't you have some insurance on your finances? So to us, hard money is insurance on the system. It's insurance on your finances. So we believe we should all have it. And then what makes it hard versus like this kind of Canadian dollar money over here? What's hard money versus unsound money? Well, the difference between hard money and unsound money is the government over here, when they're controlling the Canadian dollar or the US dollar or whatever it is, They can print as much of it as they want. The US Federal Reserve Chairman was on 60 Minutes just a few weeks ago talking about how he could digitally create as much money as they want, and they can continue to do so. To us, when that happens, that creates the possibility of inflation, at least if the velocity of money picks up, and that basically robs our savings. It's unsound. So for us to store all our savings or our wealth in this isn't really a great idea in our opinion, because there are people out there, and typically governments, who are controlling our money supplies that can print unlimited amounts of it. I mean, our Prime Minister was just questioned about the debt here in Canada the other day, and he kind of got all antsy about it and didn't have any answers. I can't even find the current exact debt levels of Canada right now because we've been printing so much money. The stats don't really exist for that kind of stuff yet that I can find. I'm sure it'll come out sooner. If anybody has that, please share. But when they can print as much money as they want, it's not a situation where I feel I want to hold my wealth or my savings in it. And that's where hard money comes into play. And it's why there are thousands of years of history in this. I mean, gold and silver have a documented 2,005-year history, 2,500 years of history of being used as money. And the main reason for it is that you cannot create a lot of gold if you wanted to. It is hard to find. In fact, the inflation rate of gold, or the new supply rate of gold, is in the last 10, 20, 30, 40, 50 years, it's about 1.5 to 2%, which means to me that if the price of gold goes up in value, there's not a lot of miners that can go out in the world and produce 20% new supply of gold. So that way, if I own gold, my wealth is protected, because someone can't go into their backyard and dig a big hole and magically find a big stockpile of gold, which could decrease the value of gold if that was the case. Because it's so hard to mine and the supply can only grow at 1.5 to 2% or so, it protects my wealth when I own this stuff, because it can't be diminished like unsound money. This is hard money. The harder the money, the better for my personal savings, in my opinion. So then the same thing applies historically to silver. Now, silver's rate of growth, the supply of silver in the world, over the last little while is about 5 to 10%. Some people will talk about it actually as high as 20%. If you go back in kind of recent history and you read about the Hunt brothers and see how they tried to corner the silver market and what happened to them with mining supply, kind of brought new supply into the market and kind of all fell apart on them. Silver has a little bit higher rate of growth. The miners can produce 5 to 10% annual new production. So it's hard money as well, because it's still hard to do that, much harder than just magically printing unsound money, but it's not as hard as gold. And it's why gold has always been the quote-unquote gold standard when it comes to money. It's also why when you look at the central banks, when anyone talks to me about gold and they kind of dismiss it, they'll always talk to me about, well, Tom, that's just like tradition, no one does that anymore. But if you look at the smart money, which to me is the central banks and big countries like Russia and China, and the US has never sold their gold stockpiles. It's still, if you go to the Congressional Budget Office and look at their holdings, they still have all their gold. Russia and China have been buying a lot of gold. The central banks across the world have been net buyers of gold since about 2009, 2010. Why are all these people buying gold? To us, it means this is the protection against the unsound money. They might be playing in this world over here, and this might be the world that you and I have to play in. But how do you protect your wealth? You protect your wealth by owning some allotment, of hard money. And everyone will ask us, what's the percentage? We don't know what the percentage is, but let's say you had $100,000 saved up, maybe have 10% of it in hard money as insurance. Because when the money is really hard, it's a store of value. This, to us, isn't a store of value. If deflation kicks in, it's true that cash is king and it can go up in value, but over long periods of time in the system that we're in, if the central banks see deflation, it's our opinion that they're going to do everything in their power to get inflation and the velocity of money rolling. So long term, we don't want to store stuff here. It might be very valuable right now over the next 6 months, 12 months, 18 months. So we want to have some of it. You want some for emergencies. But to us, this is really where you store your wealth. And the way Bitcoin comes into this, to us, Bitcoin really is a store of value as well, because the inflation rate of it is really low. There's only going to be 21 million Bitcoin. right? A few years ago, we kind of dismissed Bitcoin, I have to admit. But now that I understand it better, I'm like, holy smokes, there is only going to be 21 million Bitcoin. And after the last halving, which is the way the miners produce produce Bitcoin, it looks like the inflation rate, and there's some debate around this, is going to be going forward from today about 1.8% a year of new Bitcoin produced. It's going to take like another, I think we're at about 18 million Bitcoin of the total 21 million, but it gets harder and harder to produce, so it's going to take like another 100 years or so to finish off that 21 million. So the inflation rate of new Bitcoin going forward, it was higher in the past, but going forward, it's really low, it's 1.8%. So when I see about 1.8%, that reminds me a lot of gold. So as a store of value, something that has a limited supply that I can't go and just plug in a computer and produce another 21 million Bitcoin, this might fit the bill as well. And it's why, to me, and it's in our opinion, that this kind of belongs here. And I'm not making a general comment on all different cryptocurrencies, I'm talking specifically about Bitcoin. But as a hard money, we think it kind of fits the bill as hard money, which is like shocking to us right now, but yeah, I think it really fits the bill. So the basics of it is that hard money is hard to produce. You can't just double the supply of it, which would decrease the value. If somebody could double the supply of gold, silver, Bitcoin in one day or 1 year, it would greatly decrease the value, especially over 2 or 3 or 4 or 5 years if that kept happening. Over here, you can decrease the value. Governments around the world are printing a lot of this stuff. We don't believe it gets to the right people. It seems to be stuck in the stock market, doesn't get to Main Street, but they can print a lot of it. And if it starts flowing out, if the velocity of it increases, really inflation can take hold. That's why we want this stuff over here, right? We want our income producing hard assets, but it's also why we want to hold some of our savings in this area here, hard money and not unsound money. So hopefully that gives you something to think about. Until next time, your life, your terms.